Welcome back to the Wall Street Podcast. Today, we're doing a deep dive into a pretty significant piece of research from Morgan Stanley.
That's right. It's their report. MS Apple, Inc., North America, SEPT-Q iPhone builds revised higher, which came out on August 14th, 2025.
And the core of it seems to be, well, twofold. First, an upward revision for Apple's September quarter iPhone builds. And second, a noticeably more bullish stance on Apple stock overall.
Exactly. It's quite the shift from their more guarded view earlier this year. So our mission today is really to unpack that analysis, figure out what changed for Morgan Stanley, and think about what it means more broadly.
Right. So let's jump straight into those build revisions. They bumped the September number up by 8%.
Yeah, from 50 million units originally up to 54 million.
So what specific market dynamics are behind that? Seems a bit unexpected.
Well, the main driver, according to the report, was stronger than expected iPhone sell-through back in the June quarter. People bought more iPhones than anticipated, basically. And that reduced the channel inventories significantly, pulled it below what they consider normal levels.
Which creates a gap they need to fill now.
Precisely, a bigger channel fill opportunity for the September quarter. And it's important to note, this revision is entirely driven by the newer models, the iPhone 16 and 16 Pro Max.
Got it. So builds for the next cycle, the iPhone 17 later in 2025, those remain unchanged.
That's what they're saying. Still holding at that 80 to 85 million unit range for the C2H25 builds. The current optimism is really focused on the near-term demand.
Okay, so if September's looking stronger at 54 million units, what does that signal for the December quarter? That's usually Apple's biggest, right?
It is. And using that 54 million base and looking at historical seasonality, though they do exclude 2020 and 2021, the sort of pandemic outlier years.
Sure, makes sense.
The historical range could imply builds anywhere from 73 to 92 million units for December.
Wow, that's a wide range.
It is. Morgan Stanley thinks something more realistic, maybe a 35 to 50% quarter-over-quarter increase, is more likely for December 2025.
Okay, and what does that translate to in actual units?
That would put build somewhere between 73 and 81 million iPhones, or looking at shipments, maybe 76 to 84 million. So it suggests some modest upside for iPhone shipments in the holiday quarter.
All right, this is where it gets really interesting for investors. Morgan Stanley shifting from guarded, which they've been since March, to, well, quite bullish on Apple stock.
Yeah.
That's a notable change.
It really is.
Beyond just these immediate build numbers, what are the strategic elements underpinning this longer-term optimism? What's changed in their view?
Well, the previous cautions stemmed from a few things. Concerns about, slower product growth, potential tariff impacts, regulatory headwinds picking up.
And the AI strategy wasn't clear.
Exactly. That was a big one. Now, the bullish case rests on several counterpoints. They see what they call the largest base of pent-up iPhone demand ever, mainly because people are holding on to their phones longer, these elongated replacement cycles.
So a bigger pool of potential upgraders.
Right. Plus, there's the promise of new AI features finally rolling out, maybe some renewed focus on device form factor changes. They also seem less worried about tariffs now, calling Section 232 a non-event, and see regulation as less of a near-term threat.
Interesting.
And then there are market factors. Apple's valuation is trading more in line with the S&P 500. Institutions seem underweight in the stock, and there's this underlying belief that Apple might just be one significant AI partnership away from really breaking out.
Okay, so it's a combination of pent-up demand, new tech finally arriving, and maybe fewer external headwinds than previously feared.
That sums it up pretty well.
So how does all this expectation translate into their actual price targets? What are the bull and bear cases built on?
Their base case price target is set at $240. That's based on about 29 times their CY26 earnings per share estimate of $8.30.
Okay.
The bull case goes up to $284. That scenario assumes replacement cycles really speed up in fiscal 26, maybe triggered by a compelling AI iPhone.
Right.
That would drive double-digit revenue and EPS growth, with a mixed shift towards higher-end iPhones boosting revenue even more, and assumes tariffs remain manageable.
And the flip side? The bear case.
The bear case is down at $173. That paints a picture where the iPhone 17 cycle disappoints. Maybe consumer spending weakens if tariffs do lead to price hikes, and services growth slows down.
Leading to much weaker overall growth.
Yeah, just low single-digit product revenue growth and margin pressure. So quite different outcomes depending on whether that upgrade cycle materializes.
This Morgan Stanley analysis really seems to point towards some potential big shifts in how we all use personal tech. For you listening, what's the takeaway from all this data on builds and stock targets for your day-to-day?
Well, all this talk about elongated replacement cycles and pent-up demand isn't just abstract market analysis. It suggests we could be heading towards a significant wave of consumer spending on device upgrades.
So, if you've been holding on to your current iPhone for a while,
Right. This report suggests Apple and analysts like Morgan Stanley believe you and many others might be ready to upgrade soon. And the focus on new AI features is key. It's not just jargon. It points to potentially big changes in what your phone can do.
making the experience different, maybe making older phones feel less capable faster.
Potentially, yes. It could really change how you interact with your device daily.
So perhaps the final thought to leave you with is this. Consider how Apple finding the right AI partner, as Morgan Stanley suggests, could reshape not just Apple's own future, but maybe the whole landscape of the technology you use every single day.